Hello and welcome back to the channel. Today we're diving deep into the latest financial results from one of Singapore's giants, Keppel Corporation. They've just released their numbers for the first half of 2025, and there is a lot to unpack. Keppel is in the middle of a massive transformation, splitting itself into a lean, mean asset-managing machine and a portfolio of older assets it plans to sell off. So the big question is it working? Are they delivering on their promises to shareholders? In this video, we will break down all the key information. We will look at the headline profit numbers, explore the performance of their core businesses like infrastructure and real estate, check their financial health, and most importantly, discuss what their ambitious Vision 2030 plan means for the future. So grab a coffee and let's get into the numbers. All right, let's start with the numbers that grabbed the headlines. First, Keppel has made it a point to report its earnings in two ways: the results of what they call the new Keppel and the all-in results, which include their non-core assets. The new Keppel is the future-focused part of the company. For the first half of 2025, its net profit surged 25% year-on-year to $431 million. This impressive growth was driven by strong and steady earnings from their infrastructure segment and much improved results from real estate. Now, when we look at the all-in net profit, which includes the legacy assets they plan to sell, the figure stands at $378 million. This is still a very healthy 24% increase from the $304 million they made in the first half of 2024. This tells us two things. The core business is growing strongly, and while the non-core parts are a drag, the overall company is still moving in the right direction. For investors, two of the most awaited announcements are about dividends and share buybacks. Keppel did not disappoint. They've declared an interim cash dividend of 15 cents per share, which is the same as last year. But the big news is the announcement of a massive $500 million share buyback program. This signals strong confidence from the management and the company's value and is a direct way to reward shareholders. To truly understand Keppel today, you have to understand their core strategy. CEO Loh Chin Hua has been very clear. They're transforming into a global asset manager and operator, focusing on an asset-light model. So they've split the company's reporting. First, you have the new Keppel. This is the engine for growth. It's made up of three divisions: infrastructure, real estate, and connectivity. The goal here is to grow recurring income from managing funds and operating essential assets. Then you have the non-core portfolio for divestment. This is a collection of assets that don't fit the new strategy. Think of it like a garage sale of valuable but non-strategic items. This portfolio has a hefty carrying value of $14.4 billion as of June 2025. It's comprised mainly of legacy offshore and marine assets, residential land banks, and other investments. By reporting these two separately, Keppel aims to give investors greater transparency on the performance of their core business. The thinking is that the market will eventually re-rate Keppel's stock, valuing it more like a high-growth asset manager rather than a traditional conglomerate. This strategy is showing results. The new Keppel's annualized return on equity, or ROE, improved to an impressive 15.4%, up from 13.2% a year ago. This is a key metric that shows how efficiently the company is generating profits from shareholder equity. Okay, let's break down the three pillars of the new Keppel. First, infrastructure. This remains the largest contributor to Keppel's earnings. In the first half of 2025, the infrastructure division delivered a net profit of $333 million. This was driven by strong recurring income and new decarbonization and sustainability contracts, which have grown their long-term supply concessions to $6.8 billion. They are also looking forward to future earnings growth from about 1 gigawatt of new power capacity coming online, including the 600-megawatt Keppel Sakra Cogen plant. Next up, real estate. This was the turnaround story of the half year. The real estate division posted a net profit of $98 million, a significant improvement from a net loss of $20 million a year ago. This was thanks to contributions from their acquisition of European asset manager Keppel and gains from divesting part of their Saigon Center project in Vietnam. The division has pivoted to an asset-light model, monetizing about $830 million of real estate assets so far this year. Finally, the connectivity segment. This division, which includes data centers and M1, recorded a net profit of $57 million. While this was lower than the previous year, the segment is pushing forward on major digital infrastructure projects. A key highlight is the Bifrost cable system, which has completed its marine cable laying operations and is expected to be ready for service by the end of September 2025. They are also making strides with their proprietary floating data center project, which has completed its environmental impact assessment. Now, let's turn our attention to the non-core portfolio. As expected, this segment is a drag on profits, posting a net loss of $53 million for the half year. However, the key here isn't profit, but monetization. Keppel is actively selling these assets to unlock capital, reduce debt, and fund growth in the new Keppel. And they are making steady progress. In the year to date, they've announced asset monetization of $915 million. This brings the cumulative total to a whopping $7.8 billion since the program began in October 2020. They are also in negotiations for another $500 million in deals. Their interim target is to monetize $10 to $12 billion worth of these assets by the end of 2026. The progress here is a crucial indicator to watch. A company can have great profits, but if its foundations are weak, it's a risky investment. So let's check Keppel's financial health. We'll start with debt. The group's net gearing ratio stood at 0.90 times as of June 30, 2025, which is a slight increase from 0.86 times at the end of 2024. This is a manageable level, but something to keep an eye on as they continue to invest in growth. A more forward-looking metric for the new Keppel is net debt to EBITDA, which stood at 2.4 times. The CEO highlighted that the carrying value of the non-core portfolio is actually larger than the group's gross debt, giving them a clear path to deleverage as they continue their asset sales. Now for cash flow. For the first half of 2025, Keppel generated a net cash inflow from operating activities of $219 million. This is a significant improvement from the $96 million outflow in the same period last year, mainly due to better working capital management. Strong operating cash flow is vital as it funds day-to-day operations without having to rely solely on debt. So, what's the end game for Keppel? It's all about Vision 2030. The company has set some very ambitious targets. A key one is to grow its funds under management, or FUM. As of June 2025, FUM stands at $91 billion. They are aiming for an interim target of $100 billion by the end of 2026 and a longer-term goal of scaling that up to $200 billion by 2030. This is the heart of the asset-light strategy, using other people's money to invest while earning stable recurring management fees. To get there, Keppel is leveraging technology, particularly digitalization and AI. They're using their proprietary Keppel AI operating system to drive efficiencies across the business and have partnered with tech leaders like Amazon Web Services and Google to stay ahead of the curve. Looking ahead, the CEO expects a more inflationary environment, which could actually drive more investors towards the kind of alternative real assets that Keppel specializes in, as they provide steady cash flows and a hedge against inflation. So, let's bring it all together. The good news is clear. 1. The new Keppel's core earnings are growing at an impressive 25%. 2. The company is rewarding shareholders handsomely with a stable dividend and a significant $500 million share buyback. And 3. The strategic pivot to an asset-light manager is showing clear progress with solid asset monetization and growing recurring income. The challenges to watch are the continued losses from the non-core portfolio, the slight increase in gearing, and the pressure on profits in the infrastructure and connectivity segment compared to a strong 2024. Overall, the story of Keppel's transformation is compelling. They have a clear vision, they are executing on it, and the results are beginning to speak for themselves. The road to 2030 is long, but these half-year results suggest they are well on their way. What do you think about Keppel's performance? Are you bullish on their Vision 2030 strategy? Let me know your thoughts in the comments below. Before we wrap up, a very important disclaimer. This video and its content are for informational and educational purposes only and should not be considered financial or investment advice. I am not a licensed financial advisor. The views expressed in this video are my own analysis based on publicly available documents. Please always conduct your own detailed research and consult with a qualified financial professional before making any investment decisions. Investing involves risk, including the possible loss of principal. If you found this deep dive helpful, please hit that like button and subscribe to the channel for more financial analysis. Thanks for watching, and I'll see you in the next video.